Hello everyone, this is Romulus with Backpack Trader. Sometimes stock trading is, well, stock trading. Other times, however, it's like going back to school and taking a geometry lesson. And that's what we're going to do today. We've got circles and triangles and squares and rectangles and not so many cones and spheres. However, there are plenty of these other geometric patterns and shapes. We're going to explore one today, which is fairly common in the stock market, and it is called a triangle. Not a perfect triangle like this. No, this one is called a descending triangle. Looks more like that. Why is it descending? Because the tops, they are going down, down, down. The descending triangle, as the definition goes, is a bearish formation that usually forms during a downtrend as a continuation pattern. What does that mean, continuation? Well, let's look at one in real time. By the way, looking at patterns, it does make it easier to change the charting from the candles over to the line. That does clear things up and allow the trend lines, support, and resistance areas to be drawn in with a little more simplicity and a clearer view. So we have a downtrend in place. The S&P 500 peaked right back here at the beginning of this calendar year. That starts the downtrend. Then there's a low in here, a rise up. This rally, this rise, couldn't exceed this prior peak. Then it goes down. And now these lows are lower than this low. Then it goes up. This does exceed these peaks just a little bit, but only for 2 days. Then it gives it back up. And now we have a new low in place, lower than these lows. So we have a series of what? Lower highs and lower lows. And that, everybody, is the very definition of a downtrend. Let's go back to the continuation part that was mentioned a moment ago. The continuation, well, we just said this is a downtrend. The descending triangle is a continuation pattern of what? Of the downtrend. So the descending triangle has a couple of peaks. For some reason or another, the stock market is getting stopped at this down trend line that extends all the way back to early January. Moving it over to a candle, you can see there's a couple of other areas of resistance sort of in here. Of course, that's the second main point of resistance. And a point of resistance is an area where stock prices are being turned back from. That is an area that is resisting higher stock price movements. Then there's another little bump up in here, also an area of resistance. So again, let's move it back to a line so we can see a little more clearly. And here we go. That is the top downsloping trend line that forms the top of the descending triangle. The bottom area, well, that's support. It served as support all the way back here about a year ago plus. Then prices fell back down in middle of June, rebounded from that area. And that's what support means. Prices are falling down to the area, then they're bouncing. For some reason or another, there's demand, there's a lack of supply that creates an environment that stock prices can go higher. The same thing happened back here in early and also the middle of March. Prices fell down to these levels, hit that area of support, and then was able to bounce from them. Where did it bounce to? That area of resistance, and then it fell. It hits that support line one more time last week on April 26th, bounces again for a few days, finally succumbing. There is an overabundance of supply and selling. Demand is no longer extensively strong at this previous support area. Then prices break below. And that confirms, everybody, the descending triangle. As mentioned in the definition, this is a bearish pattern that typically includes a further downside activity as the primary direction reasserts itself, which in this case is down. How much farther can it go? There are measurable abilities and implications with a descending triangle. Not too difficult. Just take the top of the pattern, which goes back to the beginning of the year, extend it down to the support area, which is no longer a support area. That's why the pattern has been fulfilled as it broke. Measure that out, and that brings the S&P down another 15% or so, overcoming, what is it? How much time? That's the real kink. That's the chink in the armor. That's the hole in the dam and the hole in the boat here, everybody, is the timing of these things can and often are a little bit tricky and frustrating. It could be several weeks. It could be several months before this pattern fully realizes itself. The last great triangle that I saw and was able to take advantage of was the ascending triangle. Ascending because the lower area of selling is hitting similar support areas, but they're coming in higher and higher, as opposed to the S&P 500, where those areas are coming in lower and lower. So this particular ascending triangle, again, that's what it means, ascending, is on the yield for the U.S. government 10-year bond. I was able to take advantage of this with a nice trade a while ago. You see that it broke out for the first time early in January, then messes around, toys with, and teases that line for a couple of months, all the way to early March. So roughly 2 months before it finally breaks out to the upside, fulfilling the destiny, which was a much higher yield, which got us to these areas over here in the last couple of weeks. So you can see that sometimes it could take a few months just for the pattern to kick in, let alone to fully realize its potential. This potential was fulfilled. Again, the first time that it broke through was early January. And then here it is, only really fulfilling the extent of that by April. So over about 3.5 months before it was fulfilled. That can and certainly does happen quite often in these situations. Hard to tell on the timing of them. So be a little bit careful and cautious. As the breakdown took place, there was Romulus making a mistake on the language. Oversold conditions on the short term, not so much on the intermediate term. I mean, barely approaching mildly oversold in there, but I wouldn't really call that oversold. Certainly though, on the short-term indicators. So as the pattern is fulfilling, as it's breaking down from this lower line, what happens? We have short-term oversold conditions, which can often relieve and lead to a little bit of a bounce, which is possibly the reason that the market bounced up yesterday and going up a little more this morning as well. Federal Reserve meeting tomorrow, that could cause a lot of fireworks in either direction, either up or down. So I would suggest a little bit of caution on that for the very near term. However, this descending triangle, the pattern has now been, the actual measurable part of the pattern has not been fulfilled, but the pattern itself has been fulfilled. We'll see if the destiny plays out over coming weeks or months, bringing the S&P 500 roughly 15% lower than where it is trading for right about now. Caution, sure. Yeah, maybe a downward push here, as we have seen. If the definition is correct, it will continue the direction that it has been in, which is to the downside. This is your old buddy Romulus. I hope you enjoyed our geometry lesson for the day. They do come in from time to time, and they're fun, also profitable. All right, I'm heading back to ancient Rome. I've got some geometry of my own. We're building an aqueduct, and that requires a lot of intricate and complicated math. That's all for now.